What's going on, guys? So I'm super excited today. I got my man Ryan Ragano owner of Ragano CPA. What's going on, Ryan? How's everything, brother?
Hey, thanks for having me on, Vinny.
Of course, of course. So I met Ryan recently. We had the honor of having him in our office in Scarsdale. I believe Dina set it up, but I think actually Bosco is someone who already uses you. Is that correct?
That's correct. Yes,
My man
yes.
Bosco got us, and he did a class for us, and I thought it was amazing. And afterwards, I said it's a lot of information that I felt. I mean, we had a good turnout, but I think more people needed to know kind of the stuff you were talking about.
Right, right. I think it's sometimes a lot of info. So I don't know if a lot of their accountants are just lazy or if they don't want to have to unfurl such a large amount of information on an audience at once because it can be a little bit overwhelming. So I
Right.
try and break it down piece by piece as carefully as possible.
And you did an awesome job. And that was one of the questions I asked you, right? Because I'll be honest, I've had some frustration. I've been a realtor for close to 20 years, and I've got into some jams with the IRS. I think most realtors who start out making a little money and then jump to a lot of money find themselves upside down. That's what I heard. I don't know if they just told me that to make me feel good, because that happened to me. But I asked you, I said, is a CPA's job to advise you and tell you what to do, or are you just, because I found that really hasn't happened for me. It's me telling them what to do. So maybe you could touch on that a little bit. I know your answer already, but for the crowd.
Sure.
Yeah.
Yeah. I mean, I think it's my job. I think most of the value that I can provide my clients is in advice. It's not really the prep, the tax prep. It's not really inputting the info. It's the advice and the strategic planning that I can do for people. That's really what they're paying me for. So I don't know if that clearly enough answers your question, but I would hope I
No,
would
no,
hope
no.
that's what
It
they're
does. So
trying to
you're,
do for
in
you.
other words, to make it clear, you're telling them ways that they don't know, that like a realtor, for example, you're trying to tell them things that they don't know how to what to write off, correct?
Absolutely, absolutely. Yeah, of course. I'm trying to minimize their tax liability, within the legal limit as low as possible.
Okay. So let's get into that. As far as, so there's a lot of realtors that start out and they don't know whether to do a corp or when it's a good time to do a corp. You want to talk about that a little bit?
Sure, sure. So I would say the first thing is, making the decision as to whether or not to elect an S-Corp status with the IRS versus being probably more familiarly on a Schedule C is to make sure that you have the income to justify electing to be a corp, right? So if you're a starting out realtor, make sure your net income, if you're in Westchester County, is net income above 35,000. Okay, so first step is make sure you have enough income to cover and protect before you make a greater commitment to compliance, greater time commitment. There's a lot more penalties with an S corp if everything's not done properly. So you have to have enough income first to justify the savings to make it worth the time and the cost benefit analysis and the money. But it's probably even more the time and the willing to continue with the process.
So 35, you're a realtor in Westchester County, you're making over 35,000. Your advice to them is become an S corp.
And you're making, yes, and that's a net income. So after all your expenses, which is an advantage realtors have for taxes, they can write off so much. They usually have very heavy business mileage to use. They can probably find other expenses. Net income of 35K. New York City, if you're there, 50K.
Okay, got it.
All
So
right,
50 and
50K for
35.
New York City because New York City, of course, has more taxes on you. So it requires more income to justify eating, some New York City corp tax. Yeah.
Got it. So you want to talk about the process of becoming an S corp? Is that something we could dive into a little bit, or it's too?
Sure,
Yeah.
sure. So I tell people it's almost like being like a paper corporation. Okay, just explain to them that it is relatively simple. Your EIN, if you have an EIN, if you have an LLC already, you can actually keep those. So you don't need to change your entity. You will legally be the same entity. This would purely be a tax election. So the only people that'll know that you are now an S corp is IRS. IRS paperwork, all the taxing authorities. For legal purposes, for all other purposes, you can, still retain your LLC status. If you don't have any entity prior to electing to be an S-Corp, you will need to set up either an LLC or a C-Corp and then elect S status from there. So you do need to set up an entity to do this.
Okay.
What's nice though is that if you haven't done this already, there are synergies with the S-Corp strategy to lower your self-employment tax that include more generous deductions, potentially legal protection. Well, I'm not an attorney, there's potentially legal protection with an entity. There's pass-through entity tax deductions. We could go into more detail, but there's other benefits as well as the main benefit for a realtor in electing an S-Corp, which is to reduce their self-employment tax.
Okay. So, and this goes for if you're one realtor or a team, you're an individual, do you have to have some kind of payroll status? What if you're by yourself?
Correct. So being by yourself is completely fine to have an S corp. It's probably the easiest and most flexible way because then you don't have to worry about fairness in preferred shares and income allocation, which are tricky with S corps. So if it's multi-member, the share classes can change, the P&L percentages can change. I think actually one man S corp for a realtor is the ideal setup. Right. And again, why do you want to be an S corp versus reporting your income on your Schedule C? Because when you are a self-employed individual making active income, like a realtor is, without an S corp, absent that S election, all of your income is going to be subject to what is called self-employment tax. And if you look at your prior tax returns and you see a schedule deemed Schedule SE on there, you may be surprised to find that most of the income tax that you're paying is actually self-employment tax. This is regressive in that there's no standard deduction, and it's a flat rate. So it starts at $0 and it goes very far up at the same rate. And people don't realize this. They just think they're paying a lot of taxes, but it's actually not federal income or state income tax. It's self-employment tax. And this is about 16% from $0 to $162,000. And then beyond that, it's a different percentage on top of that. But to what you were saying is, if there is let's say you set up a corp, one of the compliance requirements to utilizing this loophole to feeding your money through an S corp, and then it passes through to you as a pass-through entity without the self-employment tax, is that you must run a payroll. You must take a reasonable salary so you are covered and compliant. The IRS demands, all right, you're going to set up this S corp. It's now corporate earnings. It's not all subject to the tax. The owner must run a reasonable salary through payroll for this to be compliant. So you want to do the easy parts and to not pay taxes. You do have to follow the rules and make everything look reasonable. This is something to consult your accountant with to make sure it's reasonable and covered.
So as far when we talk about payroll, I know people like I remember at the office, people get a little intimidated, but this is something, it's not as difficult as it sounds, right? There's companies that do it, right? ADP and Paycheck,
Correct. It's not
right?
as difficult or as expensive as it sounds at all. If you're really there's ADP and Paychecks for one person S corp. The pricing is not bad. If you are very ambitious and on top of things, you could even do QuickBooks payroll yourself. I think it's even cheaper. But then the thing is, you have to be responsible for all the forms by yourself. But either way, right? It's a very accomplishable task. They have to file quarterly payroll tax forms. They must be filed. If something's not filed, there are penalties. Okay, so it just has to be, executed, your plan, if you really want to do this.
Right.
They will, you can get it set up. It's all doable. People want to save on taxes. There's an avenue for you. You just sort of have to follow the rules.
Right. And most of your clients are realtors, or is that true or not true?
Not in most, but a good chunk of my
Okay.
clients are realtors.
And they're all in S corps or making over
Yes.
35?
If they
Yeah.
listen, is everybody an S corp? Yeah. For
Yeah.
a realtor,
And
it's
that's
an
on
easy
your
choice.
advice. That's on your advice. The minute you see them.
Absolutely. I will get clients who will come and don't set up payroll with their S corp, and sometimes nothing will happen for a year or two, and they'll have a notable income, and then 3 years later, the IRS sends a notice for all 3 years, and they have back taxes owed because they didn't run anything. So
Okay,
some people do the S-Corp piece and don't follow through on the other rules,
got it.
and they are very much exposed,
Got it.
very much exposed.
So what do you think are some other things that realtors that you tell them and they're surprised or didn't know, or some good advice that helps?
Sure. So the S election, I would say, is 80% of what I've
Yeah,
been
that's the big one. We
advised.
got the big one out of the way already, right?
Big one, yeah, that's a very big one. In terms of other things, realtors, like I was saying earlier, have a lot of automobile usage, which is a wonderful tax benefit that every self-employed person usually asks about or eventually comes up in conversations with me. And um, basically, long story short, there are two ways for you to deduct your auto, right? There's either the standard mileage method where you get to deduct, I believe now it's 62 cents per mile, and you get to write that off against your income, which, if it's 20,000 realtor miles, you could probably do something like that,
And that's
right?
whether it's leased, finance, or per. That doesn't matter.
Correct. You have the
Okay.
option to use the mileage deduction if you want. You could write off a ton of miles, right? Or you have to pick one or the other. You do the mileage, or you do what's called the actual expense method. And this is where you could write off your gas, your insurance, your repairs, your lease payments. And then the big one, which is if you want to use the actual method and you purchase a new car, depending on the size, you can accelerate the depreciation on the car. Some rules for 2023 allow you to write off to 80% federally of the whole value of the vehicle in year one, even before you pay for it in full. As long as you have title to it, actual expenses, you can depreciate 80% write off and clear your income for a year or two
That's a
if
big
it's a
one.
large enough
Yeah, yeah.
investment. So auto is a tremendously important deduction for realtors because they always use it, and it usually covers a lot of income very well. And
Okay.
it's a very justifiable expense too,
Right.
right? Realtors drive a lot,
Yeah,
right?
that's their it's their
So
offer.
if you're looking to
Yeah.
buy a car as a realtor, there is a tremendous tax benefit. Yeah.
So I come to you. I'm a realtor making $100,000. I don't have an S corp and I don't have a car, right? So I tell you I'm looking to buy a car. So you're first thing you're going to guide me is to do an S corp. Then when I tell you I want to get a car, are you going to say should I lease it? Should I find? Would you advise me on the best way to do it?
That's a good question. Very good question. I would present to you the tax benefits, and then I would still want you to make sure it makes sense for you, whether or not to buy the car, versus lease, because you could still write off the miles. If you lease it, you would still write off the lease payment. So you could still lease. I don't think I would insist everybody buy a car.
Okay.
But if they are willing and open to doing that, that 100K could be very well covered for a year.
And when
What's
I talk
nice
about
too.
what, sorry,
Mhm.
when we talk
Go
about
ahead.
buying a car, we're talking about financing or paying it cash. Either way.
Either way, yeah.
Okay.
So if I guess it's wonderful, like from a cash flow perspective, that you are going to get back on that 100K. Maybe if it's a notable enough expense, maybe you get back 10, $15,000 in tax, right, in year one, and you've only paid 4K out for the car and the financing. So you bought a car and you're actually ahead on cash
That's
by
crazy. Yeah.
10,000 in year one, right? So that's
Is it
a
only
time value.
is it only realtors that get this advantage, or is it other?
No,
Yeah.
no, no. Realtors have a justification, but any business owner who has income to cover, it's who has an active trader business, it's a wonderful thing that you can do. I think a lot of the luxury vehicles you see driving around may or may not have something to do with these tax write-offs. I swear, all the
Right.
self-employed people, and they have the Beamers everywhere.
Right. So I think you mentioned something at the class about the electric cars too. They even given something for that, right? Certain electric cars or certain
Yep.
weights. What was that about?
Correct. If you're into that too, there's even additional credits. So forget you can have the depreciation, right? But then if you want to do a qualified electric vehicle, depending on battery utilization of the vehicle, is usually the way there's general business credits, and you can write off for an auto for a business, less for an individual. But if you're a business like a realtor, you can get a tax credit, not a write-off of 5, 6 thousand, maybe even more, an additional credit for a qualified electric vehicle when you purchase one?
What's the difference between a credit and a write-off?
Good question. So credit is dollar for dollar money back. The government will see, reduce your tax liability or, refund your tax liability by, a $6,000 in whole. So there's a $6,000 write-off. You write down income of 6K, Credit means you get back 6K against your tax bill.
Nice.
So credits are extremely valuable. Good question.
That's awesome. This is great information. I'm trying to think what else I could ask you. So I know the clothes thing comes up a lot. Like a lot of realtors think because they dress up, they can write off the dry
Oh, this
cleaners
is
and stuff
funny.
like that.
Yep.
I know the answer to
Mhm.
this, but I just wanted to put it out there for everybody else, right? So
Yes. Unfortunately, and I try and be as creative as possible with my clients, but the degree to which you can write off clothing or uniform is one I don't usually want to cross into,
I
because
wrote, right,
uniforms are set uniforms. If they have a name of your company on it, or it's like a set uniform, like a server in a restaurant has, that is allowed as a deduction. But if you are just a realtor who dresses nicely, the closing, that is unfortunately not a deductible expense. Any clothes that
if
you
I
would
buy a
wear
$1,000
elsewhere,
suit and I put KW on the sleeve, no good.
you could try. I think the test would be if you could wear the clothes elsewhere. If you could wear that suit somewhere else
Got
and
it.
it's nice enough, then it's not really a business
Got it. Got
item.
it. Got it. But
So I
they're
would be
all, I
careful with
mean,
that one.
I see a lot of like polos that are I really can't wear them elsewhere, that are Keller Williams that I wear to work that I
I
wouldn't
think
wear.
that's yeah. I think I would push that.
Yeah.
Sure.
Yeah.
Yeah.
What else? So the clothes, the
So
mileage,
clothes are a no-go. Cars are wonderful. The S-Corp is the most important thing, and getting set up with that is, I would say, is priority number one for
right?
realtors. Um, Other things, to the degree you have payroll, realtors have income that, they don't have a lot of equipment or machinery in their work, right?
Right.
If you have income to cover, there's also self-employed retirement benefits, which regular employees are more capped at.
Oh, that's right. The
Now the
SEP,
money
right?
would
Yeah.
have to,
The SEP,
it'd
right?
have to be, you could do a SAP, you could do a solo 401k if you're an S corp. Um, Both, you can only do this to the degree that the income is subject to FICA, which means it has to go through payroll. So one thing with that, right? You have to get hit with self-employment tax, or you can't put it in a qualified retirement plan. So you have to pay tax one way or the other if you want to use the retirement. If you want to deduct it, money must be subject to self-employment tax, the W-2 monies, right?
So you advise your clients about doing SEPs and IRAs and things like that too?
Absolutely. I think that's a wonderful idea for everybody. But again, because you're a realtor, because you're self-employed, some people don't know about this, but the government allows self-employed people, to the degree it's, income subject to FICA, to put away up to $60,000 a year in tax write-off for retirement.
Right.
Which is, there were employees who have to pay, payroll tax on every dollar they earn, and they still can't do this. They can only put in 22,500 as an employee. So if that's something that interests you, you have far more flexibility to put in a lot of money and write it off.
That's awesome.
Again, at your option,
Right.
at your
Yeah,
election.
yeah, but I mean, it makes sense, right? You're in a business where most people you don't have a pension, right? So you got to do something, right?
Correct. Absolutely. Everybody, even anyone who works in private, they probably don't have a pension either. If you
Right.
work on a private corporation at this point, there's very few pension plans. So people usually max the 401k because they want the tax benefit, they want to have the retirement, but they're maxed so low. So if you're self-employed, yeah, load it in there. And then there's your retirement, and the deferral on the tax is, like an interest-free loan for 30, 40 years. Right.
Right.
And then that principal can grow, assuming money doubles every 10 years. The extra principal is, extremely added value, particularly if it's traditional, which fewer people use than they should. Usually traditional 401ks are more suited to to the optimal financial position of people in the future. But they
Okay.
like the Roth. I don't know if you're familiar with Roth
I am.
versus
Yeah, the Roth and the
traditional.
yep, yep, yes, definitely.
A lot of people like the appeal of utilizing a Roth retirement benefit because it sounds good. Oh, I'll pay tax now, and then I want to pay tax later.
Mhm.
The issue is that because you were taxed up front, you have less principal to invest. And that, and your tax rate is 40% at the highest bracket or more. That 40% of additional principal over 20, 30 years, whatever it is very valuable.
Definitely.
So
Yeah, makes sense.
usually,
Yeah. Yeah.
if you're in a high enough bracket, I really try and push people to use traditional IRAs, traditional 401ks.
And what is the max on the IRAs again? Did you say that already?
For a self-employed person, if you do like a solo 401k, don't quote me on this. I believe the new number is 62,000, 61, 62,000. But
Okay.
you have to have a lot of income subject to FICA to do that. For an S-Corp, let's just do a quick calculation. If you were putting 100K on a W-2, you're allowed 22.5, and then you're probably allowed an additional 25% of your W-2 earnings. That's an additional 25K. So even a W-2 of 100, you could put away 47,500
Okay.
in there. And if you want to put more in a W-2, if you're an extremely successful realtor where your revenue is so high that you have to justify an even higher salary, right? You could even put more away. Sure.
That's definitely a
Yeah.
great option. And I know I feel like a lot of realtors and you could tell me when, because you're meeting realtors, they're not really doing this stuff, right? I don't think
Well,
many people.
they're not executing, I would say. To what I see, they're
Right.
trying a little
Okay.
bit, but they're not executing. And I always ask people, like, they want tax savings very much, right? But are you willing to follow through, commit, run the payroll, put the money in the qualified plan? Has to, it's still yours legally, but it is in a qualified plan. You can't touch it. Do you want to do all these things? Do you really want to do this long term? And that is, sometimes I really want to check to make sure people are committed, because it only works if you're committed.
Right. Does it matter if you're an older realtor or a younger realtor, like someone in their 50s doing real estate versus someone in their 20s? Would you advise them differently as far as that?
Very good question. No, to the retirement, I want to add a qualifier too with the older people. You're actually allowed even more for retirement. You're allowed even more W-2 withholding for an older person. Probably easier to put money in retirement if you're older, because you're closer to the age you can take it out without penalty. Um, I guess I think of age as income a lot, but if it's not, holding income equal, I don't think I would advise
Any
a
different?
younger person differently. No, I think it's all income based would be the basis for the advice. Yeah, but very good question.
Thank you.
Very good question. I haven't had that asked of me before. Yeah.
How about the gifts part of it, writing off gifts and things like that? What is it? Lunches? I mean, the business lunches and
Yeah,
stuff like that.
excellent. So business lenders. So what I try and do with my clients is make sure that they're not forgetting all of their business expenses, because when you are self-employed, you live through your business, and a lot of things do have a business component to them. And so I guess what I would try and encourage my clients to do with me is look at these expenses and say, was this a business meal? Oh, did I have to take subways to go and meet my client in the city? If you did that, that is most certainly deductible. Don't forget about these expenses, because they qualify as tax deductible items. Did you have lunch with another realtor who you were working on a deal with? If you did, I would argue that meal may have that is a business meal, and that's a write-off.
Okay.
People, you talk about time commitments, keeping organized records is so important. And that's something that I, as a CPA, can only help so much with. I can set you up with a bookkeeping system, but you have to commit to keeping clean records. And if you do keep clean records, I think that you'll probably be better off, because you won't forget all expenses that you probably could deduct: meals, travel costs, gifts. In most cases, that's something to consult with your CPA specifically on, because there are rules. There may be workarounds with gifts. To just be very diligent with your expenses throughout the year, because it's a long time, a year,
Right.
and you're gonna have a lot of volume of transactions. And if you're organized up front, you can better deduct them later.
And is there a money amount, like a closing gift? Is there a dollar amount to what you can write off?
So there is a dollar amount, right? And that is $25 is the IRS rule if it is a gift, and it is strictly a gift. Okay. Um, but that is something to consult your CPA about in person, and look at the gifts and their function, because there may be ways to look at those differently or more creatively,
Right.
I would say.
Got it. Yep. And so I have an S-Corp, I have a business account, I have a business credit card. When you talk about stuff like that, I go on a business lunch, I use that credit card. Is that enough? I won't need receipts? Doing it that way saves me the hassle of getting
I
receipts?
think that's yeah. So some people love the points with their individual cards, and you can do it. It's not illegal to write things off that are under your own name for a corp or for an LLC or different EIN, right? But for accounting organization, And for the ability to provide records in an organized manner if the taxing authority ever asked, I do recommend a setup where it's business credit card, business bank account, everything's through one clean record. So then, that's also much better for the accountant if everything is nice and clean, right? And it's also better in case a taxing authority asked, where are these expenses? And you'd give them clean, segregated records already, and that would be where everything would be. So I think that's ideal. But again, it's not illegal to do it otherwise. To the degree you must substantiate as a realtor, there's no sales tax, hopefully, so you don't have to have receipt level detail breaking down the expense per item. So that means like a card statement, like a credit card statement or a bank statement, proof of a transaction is sufficient for deductibility. Everything but cash is okay, right? So then cash just needs receipts if you pay people in cash for things.
Got it. Got it. This has been amazing. I learned a lot of stuff just sitting here with you. Hopefully, the realtors that watch are going to learn, and I'm definitely going to reach out to you to help me set up, make sure I'm doing stuff right, and I recommend other people do as well. I mean, you want to drop any last thing? You think we touched on anything? Did we miss
I
anything?
think I think we touched on everything for an overview. So much of it is customized to the individual, though, and I always tell people that I'm trying to give it statements with fewer qualifiers possible, just because everything has to fit your scenario, and everybody has a different scenario. So just make sure it's tailored to your specific position. Yeah.
Awesome. Ryan, thank you so much. And I would love to have you back in the office to talk about the SEPs. If you ever wanted to come, you're welcome. And
Absolutely.
yes, thank you for this. And anybody who needs a great CPA, Ryan Ragano, CPA, check him out and talk to you soon, brother.
Thanks so much. Talk soon.
Take care.